I'm Jo Outram, the Financial Fitness Instructor, and welcome to today's video where I am looking at the phrase penny wise, pound foolish and what that actually means in terms of money management. Now, it may not be a phrase that you've heard before if you aren't British, but you may have heard something similar, such as, save a penny, lose a dollar, which I believe is very similar in meaning. Now, it's not a phrase that I use an awful lot, and it was one actually I was reminded of this week when I was talking to a coaching client and we were discussing how she sabotages her efforts where money is concerned, particularly around her business. And it just reminded me of this phrase. Now, the meaning of the phrase itself refers to the fact that you are being extremely careful about small amounts of money and not careful enough about the larger amounts of money that you might be dealing with. We look after the pennies, hence the penny wise. So we'll get all geared up for making sure that we're not overspending and making sure that we're using all the little tricks, like plugging those leaks when cancelling subscriptions that we're not using, that kind of thing. And that's quite common to look at plugging your leaks when you first start looking at your finances. And looking at that smaller stuff that's trickling out of your bank account on a routine basis, it's a good place to start, because it's really easy to do, but we shouldn't neglect the bigger stuff. But just keeping on that theme from the small amounts of expenses, if we look at things like the latte effect, which of course doesn't just refer to coffees, but all those small amounts of spending. I think it became more well known when David Back wrote his book, The Latte Effect, which, if you haven't read it, I do recommend that you do check it out. But here we're talking about those small amounts of spending on seemingly innocent things, like buying that latte every day for £3 on the way to work. If you did that daily, over a course of time, then that innocent £3 or whatever the amount is can add up to quite a significant amount of money over time. Because if you say working for 5 days a week, 48 weeks a year, then all of a sudden you've spent £720. Oh, if you're looking at that 10-year period, then that's £7,200. And instead of spending this constant small amount, you could be using that money to be repaying debt, or if you've repaid your debt, then using it for savings, and that could have a huge impact on your overall financial situation. Now, like I said, it is great to be looking at this small stuff because it adds up, and yes, we want to be plugging the leaks so that you're only spending on things that you are using and that you actually need. But what about your financial decision making when it comes to the larger one-off spending items? Now, this is where the pound foolish part of the saying comes in, because we forget about applying that good housekeeping sense when we look at the bigger stuff. And sometimes we will make mistakes on the bigger purchase that we wouldn't make when we're making the smaller ones. And I know that can sound a little bit counterintuitive, but discussing finances with lots of people, I find that this happens time and time again. Now, personally, when I first started working on my financial fitness, and I concentrated on the small stuff for years, in those first few years, and it helped me repay all my debt, and I got to the position where I'd repaid the debt and I was spending in mindful ways on those everyday items. Then came the time to purchase a new car, and all the good money habits of looking after the pennies didn't come into play with this big purchase, and it should have done. I was a finance professional after all. And I actually paid cash for my BMW because I had it available. I didn't have loads of excess cash, but I had enough to pay for the car. And it was that feel-good position of being able to hand over cash and not take on more credit. But when you take a step back and think about it, this probably wasn't the best use of the 20 odd plus £1,000 that I was spending. Because at the time, interest rates were low. So, probably the wiser decision would have been, yes, to spend the money on the car because I needed a new car, but just to get a personal loan. It wouldn't have been costing me much in interest, and it would have allowed me to have that pot of money that I could have then used, not particularly to generate interest because interest rates were low, but I could have used it for buying assets that could have generated income for me. So I could have used that, a lump sum of 20,000 to buy property to develop, or maybe to buy a rental property to put that down payment on. There's so many things that I could have done with having that pot of 20,000 sat there, rather than it being invested in an asset such as a car, which is only going to go down in value. Now, if you were to go back and look at your money mistakes, your big purchases, then we do find that those mistakes, and the vast majority of them, are around those larger purchases, because we're not used to making them obviously on a day-to-day basis, because they are in essence just the one-offs. Now, another way of looking at this phrase is where you are saving on the small stuff, but then it ends up costing you more in the long run. Another version of penny wise, pound foolish. And here are some examples of where you might be being penny wise but pound foolish under this definition. So the first example is like saving money by taking advantage of thousands of pounds on a 0% credit card balance transfer deal, which seems great at the time, but you'll only be saving a few £100s in interest payments. But then because you've done that refinancing deal, you come to get a mortgage because you're moving house, all of a sudden you're paying a higher interest rate because you've had a temporary decrease in your credit score, and that could end up costing you thousands of pounds. Or you might take out a new store card, they're offering you a discount, 10%, 20%, whatever it is, but then you don't pay off all the balance in one go. So then you're hit with interest at a high rate. You might also decide you're going to prepare your own accounts and tax return, but then later on you find that you end up owing the taxman money that then attracts the fees and penalties, or maybe you underdeclare your expenses. You might also do something like hunting around for the cheapest petrol station that there is, but then end up having to travel 15 miles to get there. In that case, it's not really a saving. So why not take a look at the possible ways that you are being penny wise but pound foolish, so that with good management skills you can save in the longer term. So that's it for today. Bye for now.